Hello, hello. This is Matt. Let's talk about something positive for a change here. You have a tax or a taxable entity, so you're making money as a trader. How your trading income gets taxed can depend heavily on decisions most traders never think to make deliberately. So instead of guessing, here's what you should bring to your tax professional. So the rules are changing. Just wanted to lay that out there. Um, So no active, if you don't take an active decision, you will be in the highest default tax bracket. Go figure, right? So they they definitely penalize people that aren't staying up to date. But first, I am not a tax advisor, and this isn't tax advice. The goal here is simply to help you have a much better conversation with someone who is qualified to advise you. One of the first questions you want to ask is how your prop firm payouts are actually classified by the company paying you. Depending on your specific situation and jurisdiction, that classification can have significant tax implications. Next, be prepared to explain whether trading is your primary source of income or something you're doing on the side. That's important context for your tax professional when they're evaluating your overall situation. Another question is whether setting up an LLC or another entity structure actually provides a meaningful benefit in your particular situation. An entity can sound sophisticated. Yeah, I'm cool. I have a trading entity. But sophistication doesn't automatically mean savings. If the structure doesn't provide a meaningful benefit for your circumstances, you could simply be adding cost, paperwork, and complexity. And be especially careful with the offshore strategies you see promoted online. Cross-border structures are often presented as an easy way to reduce taxes, but the reality is much more complicated. Cross-border and offshore arrangements can create significant reporting obligations. Getting those requirements wrong can result in serious penalties. So this is absolutely something that needs to be evaluated by a qualified professional. The more complete the information you give your tax professional, the better they can evaluate your options. Don't walk in asking, what's the trick? Or where's the loophole? Give them the actual facts about how you're earning your trading income. So start with three things: how your payouts are classified, whether trading is your primary or secondary income, and whether an entity structure actually makes sense for you. Tax rules and guidance in this area can change, and they do change. And your circumstances are going to be different from the trader here that you saw talking about taxes on social media. So here's a little guideline for you.